Okay, 3.5 minutes to go before we close for the market. Like Rima was pointing out, Dabur should be up for you on your screens. The sales were in line with estimates, but some pressure has come in on margins. Sunil Duggal, the CEO of the company, is now with us to talk about that. Mr. Duggal, up 16% in terms of margins, while the street was expecting a little better. Where have the pressures seeped in this quarter around, and what kind of margins do you think you can hold in the next couple of quarters?
Well, the inflationary pressures remain, as we all know. In addition, we had significantly ramped up our advertising spends, which did erode the EBIT margins a little bit. But the higher spends have resulted in one of the strongest ever top-line growths. We grew 27% on a console basis and around close to 20% as far as the domestic business is concerned. So I think we are on the right track, and it's a matter of time before the margin revival happens. We do expect inflation to now moderate a little bit going forward, and then we'll be taking up another round of price increases starting from the second quarter. So I do expect a gradual uptick in terms of the margin profile, but so long as our revenue streams are strong, we're not very concerned about the margins.
Sunil, hi. Could you tell us what the volume growth picture has been in Q4 blended, and even if you could break that up in domestic and international side?
Yeah, if you take a consolidated picture, the volume growths have been 12%, which is perhaps one of the higher ones which we recorded in the last 3 or 4 quarters. The price has been 7%, and we've had 3% translation gains. Similarly, as far as the domestic business is concerned, we did a close to 20% growth in top line, which was half volume, half price, around 9.5–10% of each. So it's been a much better volume delivery despite very high prices than what we've seen in the previous couple of quarters.
Okay, Sunil, just stay on for a minute or so. We just need to wind up with the markets, and then we'll come back and chat with you. A quick word on how the market has fared today. It's been a positive session, so good start to the week. We had some amount of chinks post
Deccan Chronicle and HCC as well. But let's continue our conversation with Mr. Sunil Duggal. Sunil, this quarter you told us that the ad spends had gone up considerably. Are you planning to increase your ad spends further? In FY13, what could be the percentage of ad spends we could expect for Dabur?
We probably won't increase them further. We are pretty satisfied with the levels we spent in the fourth quarter, and that trajectory would remain as we speak. We could trim them a little bit if inflationary pressures further mount, but I think that's unlikely. So I think the current level of A&P spends is what is required to drive the business trajectory growth at an aggressive pace, and that's what we would like to do.
Okay, just taking that point forward about inflationary spends, Sunil, what kind of price hikes has Dabur taken this quarter, and going forward, are there any more price hikes on the anvil?
So this quarter we are soft pedaling prices because we did take considerable price increases in the third and fourth quarter, particularly in the third. So we're just giving the market a little bit of time for the prices to settle down. But I think second quarter we would witness another round of price increases. I think it's inevitable. What we are seeing is a price increase in the region of 5% for the current fiscal. But I have my doubts whether 5% would be adequate. We probably will have to take it up by a little bit more than that because we don't see inflation coming down in a hurry.
So, are these price increases to offset the excise hike which was announced in the budget?
Partially, yes, but that was fairly moderate, under 40 crores in terms of business impact. So most of it would be to counter inflation and only a small part of it for the excise impact.
Can you give us what target do you have for volume growth in FY13? The reason I ask is because if you feel that this 5% price rise that you would take is not adequate and perhaps you would need to take more, is there a chance that your volumes could be restricted because of that? What are you looking at ballpark in FY13?
I think a reasonable expectation in terms of business growth is 15%, and as we speak, the likely trajectory is 10 and 5, 10 volume, 5 price increase. But as I mentioned, if 5 is not adequate, we would probably still see 15%, but a higher component of price and lesser volume. But it's hard to say how it plays out. The new Nielsen numbers indicate that there is a significant uptick in the rates of growth for FMCG. Now, if that is sustainable, then I think the market would be in a mood to digest the price increases a little bit better than what it did in the past. But I think a 15% or a mid-teens growth for the domestic business is par for the course as far as we are concerned.
What has been the growth rate that we've seen in the international business in Q4, and going forward, what could we expect? Because that's the space which has done well for you all, at least last quarter.
Yeah, sure. Well, the overseas impact, and this is all organic because the acquisitions have been fully lapped in the fourth quarter. The growth in INR was around 42-43%. In constant currency was around 29%. So strong growth, a good set of numbers, and the growth there is, interestingly enough, entirely volume driven. There's very little price increases which have happened overseas. The acquired companies have done well. The growth have been in the mid-teens, around 15, 16, 17% for both Hobby and Namaste. So I think the fourth quarter, at least in terms of the revenue side, has been good from all fronts. All our domestic categories have done extremely well. So we are pretty satisfied with the outcome.
Okay, Sunil, thanks so much for talking about your numbers and all the best for the quarters that are to come. That's the word coming in from Dabur, up about 1%, but margin pressures may continue, they say, and they would need to take price hikes almost to the tune of 5% in order to combat those inflationary pressures. Perhaps volumes may be restricted, but 15% is, or rather mid-teens, is a good assumption for volume growth from here on. 1% up on Dabur, good for the market, so we close at that 50 to 50 level. Take a break, come back with more Stock Talk. Stay tuned.